Hello and welcome to the latest edition of Citrus Bites from our offices in Sevenoaks. So, for those that may not know, Bank of England base rate is the topic today. Bank of England base rate has been held in July 3.75%. So that's the seventh month in a row that it's been held at 3.75 since previous, I think, December 2025, it reduced from 4%. So a bit of a mix here, though. There are 9 members of the Monetary Policy Committee that voted for this. 6 voted in favour of holding the rates, but actually 3 voted in favour of a change to the rates. Typically, that was upwards. So why is it that some of the members voted for an increase to the bank base rate? Well, that's typically trying to balance the lower than expected inflation numbers that came out at the end of last month with the big challenge of oil and gas volatility that's being experienced at the moment with the war in the Middle East and the challenge this is likely to come through under in inflationary figures moving forward. And that volatility with the war kind of stopping, and the movement it's creating in oil and gas is causing a real headache for experts, for economists trying to work out what's going to happen with the bank base rate. However, now I want to talk a bit more about what's going on with the mortgage rate piece, because one of the questions that quite often comes up when bank base rate announcements are made are to do with, well, if the bank base rate would have changed, will my fixed rate go up or down, and will fixed rates get more expensive or cheaper? So this seems a really good point to hand over to Steve to tell us a bit more. Now, before I do that, for those of you that haven't met Steve Odey before, actually, not only is Steve a fantastic mortgage and protection advisor, his claim to fame is Steve also used to be a mayor. So Steve's a former mayor of East Grinstead. Seems to be all the rage right now to be having a conversation with former mayors. So Steve, thank you so much for joining us. Great to have you here today. And if I may maybe just start with that question, which is, so if I'm a borrower, and I'm looking at this kind of what happens to my fixed rate or a fixed product compared to the bank base rate.
Okay, well, thank you for having me on the bite size, Richard. So if the Bank of England base rate goes up or down, if you're on a fixed rate mortgage, you're not affected at all until you come to remortgage. So that's what we're seeing right now in terms of clients having a mortgage rate that they locked in, say, in 2021 or 2022, which could be, 1% or 1.4% or something. And now they're coming off their 5-year fixed rate onto something which could be in the mid 4% or upwards, depending on their loan to value, of course.
Okay, interesting. So we'll come to that because it sounds like that's pretty challenging potentially for people to be facing into, and maybe a big difference in their monthly payment. But just in terms of the fixed rate, then, so it's not necessarily a guarantee that if bank base rates go up, is it guaranteed that fixed rates on the open market are going to go up? And likewise, if bank base rates come down, does it guarantee that lenders will all change their fixed rate products availability for new fixed rate products? Would they all necessarily move down as well? Or does it depend?
It depends.
Okay.
So the only, in real terms, in layman's terms, clients that have got a tracker mortgage, for instance, are going to be the ones that are affected by a Bank of England base rate change. Anybody that's on a fixed rate mortgage, they're not going to be affected at all. Lenders don't generally tend to follow the Bank of England base rate with regards to their own rates.
Okay, so actually that might explain recently why we've seen maybe the bank base rate changed as remain. The bank base rate hasn't changed, but a
Yes,
lot of lenders have been increasing their fixed rate mortgage products over the last kind of week, 10 days.
they have. Yes, very slightly, but it's been very noticeable.
Okay. What would cause that?
Generally speaking, worldwide events that you've just alluded to earlier on in the piece, and economy, anything to do with that could affect living standards, that kind of thing. Anything to do that within the UK itself, lenders get quite nervous about if things go negatively.
Okay, so I guess they're looking, aren't they? So to your point, the sort of fixed rate product might be looking 2 years, 3 years, 5 years in the future. And I guess therefore that kind of uncertainty and what's going to happen over that period of time really drives that, as opposed to the bank base rate, which is very much a kind of typically a now situation and what they're seeing in a lot of the dials now. And so just to come back then to where we were before, Steve, the I think from what I remember seeing, there's an awful lot of borrowers facing the end of a mortgage product that they took kind of 5 years ago. It's sounding like a pretty challenging time for some of them right now.
It is. I think I read somewhere that there's about 1.8 million people that are um, having their own mortgage deals maturing this year in 2026, which is a hell of a lot of people that are on a really low rate now, and it's going to be quite a bit higher when they come to remortgage. So it's going to be a quite a stressful, scary time for people, actually, to be honest with you. So you could be looking at, we've just had a client actually who remortgaged in 2021 at 1.4%, and their mortgage is going to be renewed in January, and at the moment they're looking at an additional £500 a month. So,
Wow.
which is quite a lot to find on top of everything else.
It's a really valid point, actually. Of course, mortgage won't be the only payment that people are facing into that's gone up over the last few years.
Exactly.
£500, an awful lot to find. I do, you listen now and you go, oh gosh, were those the days? Mortgages around 1%. It was clearly quite abnormal compared to the normal. Feels like we're getting somewhere closer to normal at this point, but actually that really hurts, particularly where we've seen a little bit of kind of continued house price inflation. So I don't think house prices have got any cheaper. So I find myself in this situation then, Steve, if I'm one of the people facing into this, maybe I've got a product coming out December or January, February, whenever it may be, you're pointing into the future. What do I do? When do I need to start talking to an expert about this?
Well, first of all, I would highly recommend speaking to a mortgage advisor sooner rather than later. The sooner you start the conversation, the easier it is, and there's clarity in knowing, what the next steps are, and that's where a really good mortgage broker would come in handy, because there's a few levers that they can pull in terms of mortgage term, different deals, maybe going onto a tracker, or longer term rates that might be more preferable for you, and it's worth having that conversation early rather than later, Richard.
Okay, perfect. So that's interesting, actually, just listening to you. So, the phone conversation or whatever it'll be, the conversation with a mortgage expert around maybe my product's finishing and can I kind of just review, that word review sounds like not just about kind of find me the cheapest interest rate. Sounds like there's a more thorough conversations typically that are taking place.
Exactly. It's not just about the rate, to be honest with you. It's you most A good mortgage broker would take a holistic view for their clients. So they're not, they're looking at their future plans. What are they looking to do? Are they looking to move home in 5 years' time? Are they looking to make overpayments? What's it looking like on an affordability perspective? So we go into sort of a bit more detail with regards to that. So it's almost like a reassuring part of the process, really, for a client. And actually, it's a really enjoyable part of the process for a mortgage broker, for me anyway, because I really like to be able to help clients from a holistic perspective, because they might have increased their family numbers, they might have, got a new job, or things like that. So they might be looking to remortgage or extend their home, or and I mentioned moving home earlier, and they might be looking to borrow more money potentially. So there's quite a lot to take into consideration. And I think so. It's not just about finding the cheapest rate, really. It's about looking at client's situation and their circumstances and matching their circumstances with the product that really fits them right now.
Perfect, Steve. Thank you very much. So, message loud and clear from me today, which is look, bank base rates being stable for 7 months does not mean the same thing necessarily for mortgage fixed rate products. They could be up and down at different times to how the bank base rate is moving. First
Yeah,
point. Second point would be, talk to someone, talk to an expert, talk to a mortgage broker, but don't bury your head. Don't think it will go away. Easiest thing to do is give yourself as much time as possible in speaking to an expert and getting
yeah,
that great advice. But that great advice will also take into account how your circumstances are changing, what your plans are for the future, and a lot more than simply just the interest rate.
exactly. And the other thing to mention very quickly, if you don't mind, is once we've had that conversation with clients, there's also really the other thing that is part of our role is all about protecting that asset as well, and protecting our clients. And so, the protection conversation is vital as well, particularly if you've, the size of your family has increased, your mortgage has increased, you've moved jobs, you might have become self-employed, and all of a sudden then your ability to earn an income is has gone up by 1,000%. So all of those all of that information that we gather, at a review with our clients, is really important and vital, so that we can then advise them properly and make sure that they've got the proper cover in place. Because it's not just about providing the mortgage; it's about making sure that they're, protected and their family is protected.
That's a great point. Thanks, Steve. And I guess that's what we're saying here, which is, things change, mortgage rates change, but so do people's personal circumstances and their lives change at the same time. So bringing all of that together for one conversation seems a great opportunity to do so. Um, Steve, that's brilliant. Listen, we are out of time. Thank you so much for everything today. That's really helpful. Very much appreciated. Thank you for joining us. And if you've been watching, thanks ever so much for watching today. That's it from Citrus Mortgage Bites for this month. Take care and bye for now.